insurance gyolaba ng'ambi eyapiche terina kyekuyamba wadde n'ekimu.
Person riding a motorcycle is not a third party. So even if he broke his legs, that insurance does not cover that person.
We don't want to thrust a product upon these people.
Recent
data from the Directorate of Road Safety and Traffic reveals 1,275 road crash deaths involving motorcycles and 513 passengers in the last 10 months. Amidst this festive season's bustling trade, the numbers are most likely to increase, which prompts a keen interest to understand how some of these micro-insurance products, such as the motor third party, would have played a critical role. To catch up with the competition in conventional insurance, Insurance Regulatory Authority is set to introduce the micro-insurance regulatory policy and lower the minimum capital requirements for investments in the micro-insurance sector to flourish.
Micro, small and medium enterprises dominate Uganda's entrepreneurial landscape. Unlike the high-end investments that often value containing risk through insurance and demand for conventional policies, the low end rarely partakes hedge against loss despite the existence of micro-insurance products. So, from among the many sectors that offer a better outlook on uptake of micro-insurance, let's randomly choose the transport industry for the start. Dominated by the private sector and so crucial during moments of peak demand such as festive seasons, beyond the risk that arises with rush and bustle, why is it that, despite the unquestionable instance of micro-insurance, there is limited demand for respective policies? First is the treatment from the two-wheelers.
Yewe ngutekako insurance yange, piki yange nekwata omuliro bane bagitomera. Togenda mu ba insurance bakusasule. Kubanga balina balooya, bitwala ebbanga ddene, n'oteka tuka transport ko ng'ogenda mu insurance ne batakuyamba. Wadde naaka insurance gyolaba okubaya nti bantu bakulimba, bw'oteekako insurance ku piki yo bwekwata omuliro, bakusasula piki yo. N'ebiyinza otwala emyaka 2 insurance okusasula. Eng'ambi eya piki terina kyekuyamba wadde n'ekimu.
Motor third party insurance is compulsory, meaning that if you don't have it, police will arrest you. But to answer your question, what does it cover? Motor third party insurance covers the third party, and I will explain what the third party is. The third party against bodily injury and or death only, not the damage on the motorcycle or on the car. But 2, it covers the third party. The person riding a motorcycle is not a third party. So even if he broke his legs, that insurance does not cover that person. The insurance covers me who is walking on the roadside and the border knocks me down and they break my limb. I'm third party. It will pay the person who is seated on the border being carried, but is a paying customer. But if you are carrying your wife and children to school, to church on a Sunday, and you fall and they die, motor third party does not pay.
The sector's approach towards insurance is a mix of mystery and confusion. The existence of uninsured automobiles, ignorance about policies such as third party and what it covers, casts big gaps that are further widened as third party and comprehensive insurance options prove ineffective, leading to market duplication and potential revenue loss for the government.
Insurance eyangu okusasula. Kubanga insurance senge emuyambako n'olina amanya nti ssente ze nateekamu zirina we zinyambidde. Tewali nsonga lwaki tajja kubeera ng'ateekako insurance entuufu. Olw'okubanga abantu babadde tebayambibwa, ensonga lwaki kati abamu babadde baddukidde ne mu bicupuli, era bw'ogenda okubala n'essente eziyingira mu insurance n'ogeraageranya n'emmotoka eziri ku nguudo, ojja kusanga nga essente za insurance ezifunibwa ntono nnyo. Ng'emmotoka nnyingi ssente ziyingira ki? Gavumenti efiirwa ssente nnyingi nnyo mu misolo, abantu tebandibadde bawa.
And for us, our experience has been really good. The times we have had some accidents, we have very well handled our people. Yes, we always come in to cover the first needs. When there is an accident, for example, we pay the first bills, the rush hour issues and all that. But then later, definitely the insurance comes in and assesses the loss, assesses this and that, looks at the victims and all that. Of course, they have their people who assess, and then they determine how much to pay to a victim.
A look at Africa's microinsurance index and one of the best transport industries could perhaps offer a better insight. South Africa's SA Taxi is part of a transaction of Capital Group listed on the Johannesburg Stock Exchange, and ensuring the taxi industry is a prerequisite that pushed them from small to big. In 2018, South Africa had a dominance in microinsurance with 20 micro policies. Nairobi excelled in mobile-based coverage, and Ghana reported 4.2 million policies. In Kampala, notable strides were made, showcasing progress in covering other sectors, such as agriculture, risks ranging from 50 to billion accompanied by annual claim payouts, totaling to close to 3 billion Ugandan shillings. However, locally there is a livid concern: the information gap. Right from the start, it is evident that there was and is still need for increased awareness on micro and insurance at large.
Abakulu abakulira insurance mu ggwanga batuufu nga bo baagala okulambika ebitongole byabwe, naye insurance zo nga zo ze zitawaddeeyo kimala. Kati nze mbadde nsaba abakulu abakulira insurance basomese, naye n'ebitongole byennyini ebya insurance bibeeyo bisomese abantu.
How does the local microinsurance segment look like? Currently, there are three major players: the legendary Grand Micro Insurance, Age Micro, and the newest baby, Turaco. Together, they simply take a share of the small and micro insurance market of 0.5 to 0.6%, translating into a total revenue of 462 billion Ugandan shillings in the last quarter of 2023, where micro products are also availed by other big insurance players. 2023 market growth is also slightly significant compared to the last period of the previous year, where the combined revenue was just 317 billion shillings.
The plan is to actually distribute using a B2B2C model. This is through engaging entities that are already successfully doing something with these people, either in rural, peri-urban or urban setups. Entities like banks, non-banking financial institutions, NGOs, fintechs that are already doing something, some form of transaction. It can be a loan, it can be a company selling an affordable solar panel to that person in the rural community. It can be a company that is dealing in agricultural inputs but has the ability to then add insurance in some way, shape or form onto their core offering. And we want to use technology to do that. So API technology makes it easy. If a company has that capacity, it makes it very, very easy to integrate with them and add insurance in their core offering.
The only thing I have to advise our farmers is every season, by the time the season begins, the bigger farmers have already taken up some of the subsidy. The smaller farmers take their time to get on board, and by the time they come up, they are ready, they want to sign up, the subsidy is done, so they have to pay the full premium. But the premium is still relatively affordable. That's what I can say. Compared to the losses that you may suffer, should things like drought happen, should things like pests and diseases happen, locust invasion you saw some 3 years ago, there are so many things that may happen. But how can you have an investment, big-time investment into, say, livestock or piggery, chicken, poultry, you know, cattle? People have hybrids and some of them are importing them, but they actually don't think of insurance. Or maybe the decision makers are not proactive enough to say, okay, let's just safeguard ourselves from these challenges.
Jubilee Health Insurance is a major insurance player, but isn't into micro in nature. So we engage them to understand the micro market from the bird's view angle.
Microinsurance is a very important sector of the insurance business, but it has not picked up in Uganda because of certain, dependencies that microinsurance, especially on the health side, would depend on. Number one, these are products that should be affordable to the masses that you want to sell it to. But we don't have the systems currently in place to ensure this kind of business is sustainable at the moment. For instance, you need a good technological base to be able to onboard those customers you're targeting. And in the scope of medical insurance, this means that, one, you need to onboard them, they need to pay their premiums using technology, they need to be able to make a claim using technology. So you need a technological ecosystem to be able to serve these customers. Why do you need technology? It's because you want to keep your admin costs as low as possible. In the other businesses that we do, we give medical cards, for instance, that identify our members when they go to hospitals. You can't afford to do that in the microinsurance space because your costs then simply mean they are too high. And the one defining element of a microinsurance product is that it has to be affordable to the common man in the street.
Meanwhile, Mr. Sunday Protasio, the Director Planning, Research and Market Development at the Insurance Regulatory Authority, articulates the intricacies influencing microinsurance and highlights its potential to even offset the less than 1% insurance penetration.
There is magic in numbers. Now, if you have 1 million people paying in a premium of, say, 1,000 shillings per day, 1,000 shillings per day would be about 360,000 shillings per year, if I consider 365 days, times 1 million people, you're already in billions. Now, I totally agree that the potential of the insurance industry in Uganda to grow and bypass this commonly talked about penetration of less than 1% actually lies in microinsurance. The most appropriate policies for them would be the micro insurance policies, not the conventional medical, the conventional life assurance policies. It is these small value policies covering low value risks. But because the numbers will be too many, then you'll have greater money is coming into the economy. You'll have many people contributing towards the insurance basket, and therefore the penetration will actually increase. Why South Africa is at 14% or so is in part due to the fact that almost every person in the South African economy has, in one way or the other, an insurance policy. So it doesn't surprise you that South Africa, actually I think in the world, should be the most insured country.
A study by EPRC affirms our findings in this investigation, highlighting challenges like institutional weaknesses, client knowledge gaps, limited coverage, sustainability concerns, which even Jubilee Health Insurance contends to.
We have to ask, how are they surviving now? How do they take care of their health insurance needs when they fall ill or when they get accidents? Because the problem in the past has been people sitting in a room, coming up with what they think is a good product and thrusting it upon people.
When the expectation is that you have to invest for a little longer for you to get your money back, many people will not invest in that segment. Microinsurance by design is not a business that will give an investor returns in 1 year. It is not an investment that will give an investor return in 2 years, not even in 5 years. It is a long-term investment because, one, it involves building numbers because you are getting small premiums. Now, for you to get a reasonable premium so that you can be able to offset your operational costs and make profit requires some time. Most people the shareholders want to invest their money and get profits tomorrow. Microinsurance is not for them. Microinsurance requires significant initial investment to create awareness, to change the mindset, but also to create a distribution infrastructure. Because by its very nature, the brick and mortar of having a branch in Kaberamaido, a branch in Kayunga cannot work. Because the branch, their operation, their fixed costs, which the money you're getting will not be able to offset. So you need to have a technologically enabled distribution infrastructure, which will, in the long run, drive the average costs of supplying your products to the levels that will allow you to make profit. But the good news is, for those that have tried, because we have experience from countries like Malaysia, countries like South Africa. In South Africa, actually, microinsurance, especially the funeral cover, constitutes a significant proportion of the market share. Talk of about 10-15% of the market share. Because the mindset has changed, and people now, however much poor they may be, they are looking at their health. They are looking at their death. In the event of death, what happens? Why should you bother people to mobilize money to bury you?
Amidst the bottlenecks, outlook for 2024 appears optimistic. The regulator is planning on significant changes, for instance, introducing the microinsurance regulations to address the institutional policies and foster market diversity. Notably, the minimum capital requirement is poised to be set at 500 billion Ugandan shillings and further create a favorable condition for investments to flourish.
What we have done as a regulator, number one, we are in the final stages of coming up with a dedicated regulation called microinsurance regulation. And in this regulation, we are providing regulatory incentives for investors to come and invest. One such incentive is that we are making the capital requirements very low. I think about 500 million, compared to 6 and 4 billion shillings expected of the other conventional insurers. Here we are talking about 500 million shillings. The compliance requirements are being lowered so that if you have your money, your 500 million, you find it easier to enter the market. But we are also asking for less money as minimum capital requirements so that we allow you the leverage to invest in growing the market. But number 3, we have also recently decided to establish regional offices, going closer to the people, because currently as IRA we have been just in Kampala. But we are saying, why should we serve Kampala?
Era tulina essuubi lya amaanyi nti mu mwaka ogw'2024 tugenda kuwa license abantu abatunda insurance ey'obulimi abayinza okuweerera ddala omutwalo. Tugenda kuwa, tusuubira okulaba nti nno insurance eno ey'omuntu owa bulijjo gye bayita microinsurance nga nayo etteeka erigiyongera okugiruŋŋamya lifuluma era eyongere okubeera nga yeeriisa enkuuli mu Uganda, n'okwongera okulaba nti nno insurance ey'obujjanjabi eyinza okuyisibwa mu mwaka ogwa'2024. Etteeka eryo erigenda okubeera eriri kati mu cabinet nga liyisibwa. Ebyo byonna bigenda kulaba nti insurance yeeyongera okutereera era 2024 tugusuubira okubeera omwaka omulungi ddala.
As we wrap up our exploration of the microinsurance landscape and as we look forward to the new year 2024, optimism prevails. However, obstacles persist. The path forward promises market diversity and heightened investment. The expedition towards a stronger microinsurance sector in Uganda's transport industry marches on. Runana Habwe, Smart 24 TV.